Welcome to Cortburg Speaks Retirement, an audio podcast about investing in the stock market, financial planning, money management, and retirement planning. Each Wednesday, we help investors at all stages of life learn how to potentially grow and preserve their money from first job through retirement. Now here's your host, Miguel Gonzalez.
Good morning and welcome to the Cortburg Speaks Retirement audio podcast. On this week's audio podcast, I share important retirement contribution limit changes for 2024 so you can make 2024 the year you take control over your retirement savings. Life today is expensive and contributing to a retirement plan is more beneficial than ever. Recently, the IRS announced that it was raising the contribution limit for 401ks to $23,000 for 2024. Up from $22,500. In a world where pensions are nearly gone, having the ability to put more money away can help you prepare for a retirement that may be here faster than you think. According to the Investment Company Institute, Americans had more than $7 trillion in 401ks and $13 trillion in individual retirement accounts, IRAs, in the second quarter of 2023, and only about half of Americans had any retirement funds saved up at all. Were you one of them? How will the new changes impact you? Know that it is not only the 401k that has changed. If you are somebody who is building not only a 401k but a 403b, one of the several 457 plans, or you're eligible for the federal government's thrift savings plan, the limit on elective deferrals for 2024 will also grow to $23,000, about a 2% increase from last year. For individuals age 50 or older, you will be allowed a catch-up contribution, an additional $7,400 for a total of $30,500. If you save using a Roth or traditional IRA, this is for you. IRA contribution limits also increase $500 for 2024 to a limit of $7,000. In 2023, it was $6,500 and to $8,000 for those age 50 or older. A Roth IRA requires you to pay income tax on your contributions the year you make them, but any withdrawals at retirement or before retirement, if eligible, will be tax-free. The rules are as follows. 1, if you're single, make over $87,000, and have access to a workplace savings plan, you will not get a tax break when you contribute to a traditional IRA. Number 2, if you are married and the spouse who has a savings plan at work contributes to an IRA account, you are not permitted a tax break if you earn more than $143,000 annually. If the spouse making the IRA contribution does not have access to a workplace plan, but the other spouse does, the threshold climbs to $240,000 a year. If you are single, number 3, if you are single, head of household, or married filing separately, meaning you did not live with a spouse during the year, and earn $161,000 or more, you may not contribute to a Roth IRA. If you are married filing jointly and earn $240,000 or more, you will also may not contribute to a Roth IRA. And number 4, if your income is too high and you cannot contribute to a Roth IRA, there is a way around that is called a backdoor Roth IRA. To do this, you have to put money into a traditional IRA and then convert the account to a Roth IRA. What about, are you eligible for the retirement savings contribution credit, known as the Savers Credit? Well, low and moderate income households may get help from the Savers Credit, which pays up to $1,000 for individuals and up to $2,000 for married couples, depending on income and contribution amounts. As of this year, 2024, if you're single, to qualify, your income must be below $38,250 a year. Again, your income must be below $38,250 to qualify. Head of household must be less than $57,375 and below $76,500 if you're married filing jointly. Other contribution and cost of living adjustment limits for 2024 include simple retirement accounts limits. For those under age 50, it is now $16,000. Age 50 and older, it is $19,500. For defined benefit plan limits, the limitation on the annual benefit under a defined benefit plan has climbed to $275,000. Suppose you're a participant who's separated from service before January 1st of this year, 2024. In that case, your limitation under a defined benefit plan can be calculated by multiplying your compensation limit adjusted through 2023 by 1.0351. What about defined contribution plan limit? Well, the total contribution limit for employee and employer contributions to a 401k defined contribution plan has increased to $69,000 a year for 2024. But it's never too early to plan ahead. Staying up to date on changes to contribution limits could benefit you and your retirement strategy. So make 2024 the year that you take control of your finances. Schedule a consultation with your financial professional and see how these new changes could impact your financial goals. Also, visit our website. Make sure to visit our website, www.cortburgretirement.com. Our site is filled with educational videos, ebooks, publications, and financial calculators designed to help you learn more about your finances. As you search our site, send us a note regarding any questions you may have about any particular investment concepts or products, and we will get back to you quickly with a thoughtful answer. This is Miguel Gonzalez, certified retirement counselor and managing partner with Cortburg Retirement Advisors, signing off for this week's educational podcast.
The opinions expressed and material provided are for general information and should not be considered a solicitation for the purchase or sale of any security. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Securities offered through LPL Financial. Member FINRA SIPC. Investment advice offered through Private Advisor Group, LLC, a registered investment advisor. Private Advisor Group, LLC, and Cortburg Retirement Advisors, Inc. are separate entities from LPL Financial. Investing involves risk, including possible loss of principal.